Hi, this is Akshay from Finethics Financial Services Private Limited. Many of you might be wondering what's happening in equity market. Since August 21, Nifty is almost at the same level. Equity mutual fund returns are also reflecting the trend with all the noise coming from global markets. It's no wonder that people are confused. What's about happening in equity markets? Any market to run, three factors are necessary: money, sentiments, and fundamentals in the short term. Markets are like voting machine. The flow matters in the long term. Markets are like weighing machine. Fundamentals matter. Let's look at sentiment. Sentiments are impacted by events, and all kinds of events keep on happening. Some improve sentiment, some will adversely affect it. Who would have thought that 16th largest US bank will fold like a pack of cards? Russia-Ukraine situation, if it de-escalates, will have a positive impact on sentiment. If not, it will have an adverse impact. How much Fed rate will be raised? When will Fed start cutting grapes? That will have an impact on sentiment. It will be fair to say that many events will continue to happen and they will all continue to impact sentiment. From a flow point of view, foreign portfolio investors have been regular seller in Indian equity market. They are finding Indian activity expensive vis-a-vis peers. They are having profits in Indian equity market and they are getting an exit. Put together, FPIs have been seller. Domestic institutional investors led by mutual fund have been counterbalancing FPIs, and hence their selling has limited impact on index. In most parts of the world, entry into a market is easy. Paisa feko, tamasa dekho type. Exit is difficult. Very recently, Dr. Movius, an emerging market guru, mentioned that despite selling his shares in China, he was not able to take money out. In India, case is exit is easy. Between October 21 and May 22, ABI sold close to $32 billion of equity. We gave them exit not only from the equity market but also from India by allowing them to take their money. My feeling is that once our valuation comes in equilibrium with our peers, FPIs will come to buy India. They may find India expensive in the short term horizon, but they will come back to participate in long-term India growth story. Domestic investor flows in market continues. SIP is averaging around 13,500 to 14,000 crore a month. Whenever markets are down, lump sum flows come in put together. From a sentiment and from a flow point of view, market looks supported. It is the fundamental which makes all the difference to the market over a long period of time. Our economy is to be in good shape. 6 out of top fastest growing cities of the world were in India in CY22. The same trend is likely to continue going forward. China and India are the only two economy which has grown relative to US over the last 2 decades. No other country has been able to achieve that kind of growth in our peer group. India is one major economy which has improved its debt to GDP ratio from subprime crisis in 2008 to COVID-19 2022. No other country has been able to achieve that. With a little bit of price and time correction, India equities today trading at reasonable premium to its global peers. There might be need for some adjustment, but certainly based on our historical valuation, now Indian markets are in fair value. Corporate earnings were little below expectation in September 22 and December 22 quarter. But January, February, March numbers seems to be moving in right direction. Trade deficit, which was a worry till December 22, has come under reasonable control in January as well as Feb. Rural consumption, which was witnessing negative volume growth for last 5 quarters till December 22, seems to be recovering based on monthly data available. While there is a concern on monsoon getting adversely impacted by El Nino, we'll get the confirmation about the severity around 15th of April. Net, put all these things together, India comes to remain a long-term growth story. It might look expensive in the short term to outsider, but over a longer period of time, there will be no comparison to India's growth story. What should we do as an investor? Well, this is fair value market, but there are so many events happening, from Russia, Ukraine to oil price to US Fed to general election in 24 to corporate results, that markets are likely to witness both side movements. As market corrects and valuation becomes more attractive, and buying into the correction between large, mid and small, there is a equilibrium valuation when no aggressive calls in terms of overweight or underweight. Common sense suggests that small and mid cap tend to fall more than large cap, and hence it might be appropriate to be marginal overweight large cap and marginally underweight in small cap. Use correction is an opportunity to buy. From a sectoral point of view, banking and financial services sector was witnessed heavy FBI selling, but now their holdings have come down to historically low level. Banking sector performance continues to be good. Valuations are reasonable. NPS are at decadal low level. Margins have expanded and are stabilizing. Put together, it could be one sector to buy on correction. Ahead of election, government puts money in the pockets of consumer. Most of the money go to bottom of pyramid. Their spending propensity is far higher than saving propensity. Consumer staple endurable target at the bottom end of the pyramid will benefit from this money transfer. China plus one is expanding. 14% of companies migrating out of China are setting up shop in India. Thanks to China plus one, global buyers are diversifying their supply base, and many of them are open to do business in India. This is expanding India's manufacturing base, and we believe manufacturing themes should do well over the years. Between banking and financial services, water, mint, consumer staple, as well as durable and manufacturing, we think one will have market outperformance. What should you as an investor be careful about? Please ensure that you remain invested in the market despite returns since August 21 not looking encouraging. Market is like a test match. More you stay on the pitch, opportunity to make money will increase. Please continue your systematic investment plan, and on correction, think about topping it up. From here till May 24, many events will continue to impact market both ways, up as well as down. Huge correction is an opportunity to invest into the market and participate in India's long-term growth story. Our fundamentals remain strong and is becoming attractive every day. Domestic investors' sentiments remains robust towards India. Foreigner will probably follow through. Put together, there will be Triveni Sangam of positive sentiments, solid fundamentals and strong flows to propel Indian market to a higher level. Keep participating in Indian growth story. Thank you so much for participating and watching this video.